You look for a movement, look for your setup, look for the volume to increase in the traders, and you just ride the wave with everybody else.
Hello, and thank you for joining us for Prodigals Build Episode 9. I am Kimberly Johnson, your host and owner of Prodigal Sons Academy. Today we have a very special guest. His name is Otis Chandler, and I've known Otis for quite a number of years. And I've always been so impressed with his level of intelligence. He's well-traveled and well-read, and you will see that in today's interview. Otis received his bachelor's in physics from Grambling State University. He went on to receive his master's in engineering management from the University of Missouri. He was able to spend time in Germany and South Korea during his time in the military. After that, he started working as a federal government contractor. And during his number of years there, he had the epiphany of, hey, wait a minute, I'm here and I'm building other people's dreams, but I should be spending the same time building my own. And with that philosophy, he realized that he could make his money work for him instead of working for his money. And that's what we're going to hear about today is his journey into stock investing and options trading, which led him into Forex. And that's where he enjoys his time most with Forex trading. So we're going to hear about Forex and we're going to hear a little bit more about him. So welcome, Otis.
It's a pleasure being here also. Yeah, I like it.
We're really interested in hearing about how you got into Forex.
Definitely. I am a member of Omega Psi Phi fraternity and went to a district meeting, and there they were talking about stocks, buying stocks more. And I was already in that space. So the person who was talking about it, I approached him and just finding out the strategy that he had for the district. And it was to buy 1,000 shares of each of 10 each stocks with dividends, and the district would live off of those. So I asked him for the list of those stocks. He gave them to me. I did the exact same thing and did well. And during that, I learned. I see how the market goes up or it goes down. You get happy, then you get sad. And that was it. So I was happy with that, and that's a great thing to do. Then the foreign exchange market opened up, and I thought that would be interesting. Now, this exchange, as compared to the stock market, is open 24 hours a day for 5 days a week. And those are the hours you can trade, starting at 5 p.m. on Sunday, shutting down at 5 p.m. on Friday, right? So the Forex is a little different because you're trading currencies against another currency on countries around the world. So how their currency is doing. And with that, you can really tell how each country is doing financially. If they're arguing, if it's a war there, if there's disagreement, their currency would sell off. Is the dollar stronger than the Japanese yen? How do you know? Look at the chart. When you go and do something, is the euro stronger than the British pound? You can trade those against each other. And I like the trading. Now, there's a difference between a trading and investing. With the stocks, I invest. With the trading, I trade back and forth. With the Forex, I trade back and forth. And I'm in a position and I hold it for no longer than 48 hours. And by definition, the IRS definition, trading is anything you buy and sell less than 365 days or less. So that's a year. And 366 days and farther and out, that's investing. So, and the implications of that is the taxes. With the trading, you do get taxed a little bit higher than you do on investing income. So that's how I got into Forex. First, the baby steps with the stocks, and then on with the Forex. And I'm still there and I still love it. I use forex.com is what I use to trade the Forex on it. And they give me, there's a wealth of services that they do to help me get in and out of the trade as I want. Now, with everything to include, well, with trading, no matter what you're trading, I always, always, always have a stop loss, because you may be in a trade and it's going great, but then you remember you got a cup of boiling water on the stove and you got to run away and deal with that. And in that time, anything could happen, but you got to deal with the emergency here. And if it doesn't go the way you want it to, at least you know that your losses would be minimal. If you're holding a trade overnight, it's especially important to have a stop loss in there, because you cannot see, you're not there watching it every move it makes, but the stop loss will minimize your losses or gains, because if it goes past your take profit point, then you can lock in your profit for that trade.
All right. So options trading. So stock options versus Forex.
Okay.
Which one is less stressful? Which one is easier to learn? Like, I want to know, if you had to choose between the two, obviously you will choose Forex, but there's a lot of people out there right now that are doing the options trading and trying to get their feet wet over there. Do you feel like there's a comparison between the two? Is one better than the other? And if so, based on what?
Well, I like Forex, and the reason is it's a little bit faster than the stock options. Now, options, you got to understand what you're doing and how much it costs to get into a trade with options, because you have to buy a contract in options, and a contract is at 100 shares of a stock. So, but you buying the right to do what you want with the top with that contract. And I think that I like Forex better. I think the reason is because I think the option play is a little slow for me. And the Forex, you don't deal with the dollars, you deal in pips, which is a percentage. So you take that decimal point and move it over 4 places to the right, and that's what are pips that we deal in. And that's where the money's made. The options are cents. You move that decimal point 2 places over, and that's it. So there's a lot more opportunity to earn or make in a Forex world than the option play.
No, I was just wondering if Forex is something that you can just jump into, or is there kind of a path to it?
So it is, I took the path to it, but you can jump into it. But in everything and anything, you got to be educated to do it. You have to know, uh, understand what you're doing, and then ask questions. Look at the indicators. There are plenty of indicators. And outside of that, just be patient. Even in the stock market with trading, the patience is the key.
Okay.
The stair step is what I took, and I thought that was the best because I did understand some of the natures of stocks, and I used to trade by definition stocks also. I was in them for a month or 2 or 3. Then when it turned, I was like, okay, that's it. Took my profit and go. Uh, then I switched. I more into dividend stocks because I'm looking for that income, and I'm still with the dividend stocks. And that income is providing a lifestyle as I reinvest my dividends into the stocks. And trading, I I like it. I just because it's 48 hours later, you putting money in your pocket there, you know.
Yeah, that's nice.
And there's even a faster one than that, which is binary options. And I do that also. And with the binary options, you can do it on any equity class to include stocks, certain stocks, Forex, commodities, indices. And I only deal with the Forex though. I just deal with the Forex, deal with what you know, right?
Mhm, mhm.
And it's worked out really well for me. And I'm very pleased with it.
So how many days a week are you trading?
5,
All 5?
4 to 5. Sometimes I let off on Friday, but it's I'm looking at the charts almost every time.
Mm.
Now on Friday, you look at them, and I might do it on a demo account on Friday, but the rest of the days I'm live and active. As my Forex play is playing out, I do sometimes switch to binary options and play the Forex market on there. Now, to explain real quickly what that is, that's a time-based trading. You say after uh, a minute, 5 minutes, 10 minutes, you get in at a certain position. After 10 minutes, that point where you get in, it will be higher or lower, right? Than in 10 minutes. And depending on the charts and how they look, you say, yes, I think after 10 minutes, this point or the currency pair will be lower than what I got in at. If it is, you win a percentage of what you not wagered, but invested or traded. So if it's $10 and it's a 80% win, you made $18 on that. You get your $10 back plus $8 additional dollars from that.
So are we talking like calls and puts and
No,
puts? Is this
it's
okay?
different. It's different
It's different.
than calls and puts. Yes,
Okay. All right.
it's faster,
It,
and it's based on time. You can go all the way down to 5 seconds if you want to get in and out that fast. 5 seconds to probably a week. So those are and anywhere in between.
that's just making my heart race, Otis. Just a 5-second move. I could actually,
Yeah,
wow.
yeah. I saw it, but I was going to try it, but then I was like, nah, I'll wait. I'll wait the whole minute or two.
That's just too much. Oh my goodness.
Yes.
So how much, if I'm just starting out, how much should I start off with money-wise to invest?
Invest
Well, to start
to
trading.
trade.
Mhm.
Okay, so to trade, it's really what you can handle, and it doesn't matter the amount because using proper risk management, you risk no more than 3% of whatever you put in there.
Mm.
And that's my goal on any pair. And you get into no more than 5 trades at a time, right? So if you 3% times 5, that's 15% of your total capital at play at any one time.
Mhm.
And you have to see the setup. So whether it's $100 or $100,000, don't risk more than 3% per trade. And it's just being patient. The wins will happen. And once they happen, that 3% that you do will get larger and larger and larger. So
Sure.
you can be a little bit more riskier. But in everything, you have to protect the downside or the difference in direction
Mhm.
than your trade.
So what's a minimal amount? Like, is there like a minimum that you can
The-
start? Like I can come in with a penny and do something? Like how much do I need?
so I would go as low as $100. You can actually get in there. I haven't seen it,
Mhm.
but in order to make, if you put in 100 and you wager your 3% and you win again, now you got $103 and you can just grow from there.
Mhm. Mhm.
Um, I haven't seen the minimum at all, but as a safe bet, 100. But then again, you risk what you can afford to lose. That should be Saturday, Friday night money that you're not in the snow outside. So since you ain't spending it at the bar or anywhere, you take that and put it in the market, right?
Right, right. Yeah, why not? When do you do your charting? Is that like on the weekends for the week coming or is it day
uh,
to day?
so I look at them every day. I look at the charts every day. I try to find the pairs. And I look through everything, especially the two that I like. I really look at those. And what I see is when I go in to look at it, I look at a lot of indicators and read the news of what significant is happening in that country that could affect the price going up or down. And at that point, and I do that probably the night before or a few hours before I get ready. Now, the markets, the Forex markets are open all during the 5-day week. So it's, I look at it, okay, nothing's happening that would affect it, and I'll go for it. Now, if there is an event that will affect the trading price or the call or the whether it goes up or down, for the day before and day after, you will not mess with that currency because of one, the event happens and then there's fallout. The 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 currency could fall. But if it goes against every other currency that is traded against, but if it's a good one, it could go up.
Mhm.
But you're trading pairs. So you're saying my pair is stronger than your pair, or my pair is weaker than your pair. Either way, you in that pair, you can make money, whether it's going up or down, depending on which pair you think is going to, which currency you think is going to win in that duality.
Mm.
Which one is stronger or weaker in that duality, whether you think it's going down or up. It's not as hard as the explanation. Just like I'm going to compare it to swimming. I can show you all day long. You can watch videos all day, but until you jump in that water,
Exactly.
that's where you will learn it, and take baby steps at it, and it will turn out to be really good.
Well, speaking of examples, can you try to give us some parallel to understand the pairs against the other pairs?
I'm gonna use because this relates to all of us, the US dollar versus the Canadian dollar. I mentioned that it was mostly compared to oil prices, right? It's based off of that. And looking at that, if oil prices are going up, now the USD is before the CAD, Canadian dollar, which means if we're, say it's at $100 for an example. If you think the oil prices are going to go up or be more powerful, that means by that pair that the US dollar is going to be weaker, and our prices for gasoline will go up, right? So in that pair, you're saying the Canadian dollar will is stronger. So that means in that pair, uh, it's going to go down towards the Canadian dollar. So it'll be less than 100. It'll keep going down, down, down. And you would say, I want to get in the Canadian dollar over the US dollar, and it'll just continue to fall. And as it falls, you are winning. Now, after a week, you see that you hear in the news they found a whole bunch of oil. The president's releasing funds, and this oil is flowing into the country. You know that it's going to change in direction, and the Canadian dollar is going to be weaker, which means it's going to go in the opposite direction. The Canadian dollar is weaker. By that pair means the US dollar is stronger, which is going to go up. Then soon it'll creep back up to the $100 and probably above it and keep going on. And what you're saying is, I bet my 3%, up to 3%, that it will go up and higher and higher and higher. And as it goes up in pips, right? The cost in pips is when you'll make the money. So if they say that gas prices are going to very high, right? They're higher this week. It's great news because you know that the CAD on all pairs are going to be stronger, and money is flowing into the Canadian dollar. So that's the path in which we, the traders who trade the Forex and other types of anything, They would look for a strong Canadian dollar presence and against anything. If I have a country that is very weak and their currency is weak and they're paired with the Canadian dollar, that that ticker symbol will move very fast because oil is going up, which is the Canadian is going up, and their dollar is very weak, which is pulling down while the Canadian is pushing up. That chart is going to move higher really, really fast, or in the favor of the Canadian dollar, whether it's going down or up, it's going to move strongly in that direction.
You mentioned earlier that if you see it in the news, it's too late. So are you also then looking at your technical analysis to kind of figure out what's going on?
I pretty much always look at the technical analysis. The news, as far as the television, the written news, there's a site that tells you what's going on in each country, what's coming up, because you don't want to see it now. You want to know if it's going to happen. They are going to talk about the news. So in this example, if you know that the say in Saudi Arabia, they talking about they're going to shut down oil production, right? We're going to take it back, instead of 100 million gallons, they're going to only produce 10, right? So that's going to be an impact on the global operations. So in that case, oil is going to be the price is going to go up for that. And you start to look at the signals and indicators on the Canadian, or on the CAD, the Canadian dollar, regardless whether it's paired with anything. Once you do that, you look for a movement, look for your setup, look for the volume to increase in the traders, and you just ride the wave with everybody else. I do believe in the market that there literally can be no competition because everybody can win. You get in at the same time I get in, we both are riding that wave.
Yeah, that sounds wonderful. Let's just kind of give you some accolades. You can brag about yourself right now. Like your best day, what would you say?
I would say, and I don't do it all day, but my best day is around 3,500. I am conservative, very, very. I get in, but my margins are tight. But and I think that's pretty good. That's pretty good because I trade, as I said, 4 days a week. If an opportunity happens on Friday, I'm gonna look at it and jump in. But this is, again, fun.
What I really try to stress to anyone who watches our podcast is it's multiple streams of income. You're not looking to cash in on just one thing.
Exactly.
So this is just one stream, one effort, one option that you can use to build wealth. So starting out small is okay.
It is. And one thing, it is persistence, consistency, and a lot of patience, because no matter how much you put into the market, regardless of what market it is, the Forex, the stock market, you're not going to move that blip up anything. You got to follow the big money, and following the big money that's in there, pushing that stock price up or pulling it down, you're going to benefit from it. And you just have to watch the signs of what they're doing and just take advantage of it. I definitely think working with someone, because you got real life questions answered, you can see their thought process, you can ask them. And one other thing is, in trading, you do need to be patient. Can't stress that enough. Sometimes you'll make a decision, everything will look right, you'll get in it, and it goes the opposite way that you think it'll go. And in that case, you can't just get mad and blow up. It's about being patient. Never, ever, ever chase a trade, because you will lose. And although you feel that it's going your way and you're watching it go up and up and up, the thing is, control your emotions, because as soon as you see it's going up and up, You blink and it'll fall right down. And it's about managing your risk, managing your profit, and just being patient through the whole process. That is why I think it's imperative to go through a demo account first. But it's a big mindset change when you jump over from demo. You can be very successful until you're using your real money, because you know that now this will affect your money. Where in a demo account, you're like, it's not my money. But the real money will humble you. You get a little bit more cautious, and you'll take your time a lot more. And you'll be like, do I see it? Is it going to do this? You start questioning yourself. That's another reason why the 3% that you only risk, the maximum you risk on a trade. So it could be 1%, a 0.5% of what you want. And that'll help you out also. You don't have to risk the whole 3%.
So how do you know if Forex trading is for you? Is there anything that you can kind of self-assess?
So I would say if you look at what's going on globally, see what's happening in this country versus that country, because all the conflicts, all the niceties, all of everything will affect their currency prices. If you like that, if you pay attention, get into it.
Well, thank you so much for spending time with us. I learned a lot. I have a better understanding because Forex just sounds so complicated, but I think you made it simple enough for even me to understand. Oh, but thank you so much. Everyone, please like, share, subscribe, comment below. Otis is available to talk to you if you guys have any questions, if you want to delve into this a little bit more before you really go into Forex. I think it would be great, like he said, it'd be great to have someone to talk to about it so you can ask your questions, because it sounds like it's a little dicey out there, but I think if you have someone who can mentor you, who has the experience like Otis has, I think you guys could really be successful. So, but thank you so much, and we will see you next time on Prodigals Build.